Hey, we are live. Thanks for joining us, everybody. Give everybody a minute here to come into the room to talk about one of the most exciting, thrilling topics of e-commerce, sales tax. You all came today to get your questions answered about sales tax, and we're here to dig into the topic and hopefully dive into some of this, providing you guys a path to understanding sales tax. And what I was joking with Neil about before we started was, it's not the sexy topic, but man, it's something we all need to be concerned and worried about and spending time on, right? So I want to take a quick second and ask you guys, in the chat in the chat box to start some conversation with me. I'd love for you to talk about what's the hardest part of managing tax compliance for your business. What are you facing as a challenge right now in managing tax compliance for your business? And maybe how is your company currently managing its sales tax? Those are things that would be great for us to know about you so that we can help make sure we bring value to what you're looking to solve. And if you don't have one of those, or like somebody just answered, I'm just starting, everything's an issue. What's your biggest issue, right? Like, what's the biggest issue? Is it a source of information? Is it, how do you do it in the US versus Europe? Let us know kind of what your biggest issue is for you today when it comes to sales tax and managing tax compliance. And throughout the presentation, if you have any questions, use the Q&A or use the chat bot to go ahead and communicate with us, and we'll answer all of those questions at the end. For those that don't know me, my name is Jeff Cohen. I'm the Vice President of Marketing for both XCart and Seller Labs. XCart is a Seller Labs company. It was acquired by Seller Labs around 18 months ago. And we work with companies in the e-commerce space, providing a solution that's affordable, flexible, and scalable to meet your e-commerce needs for today and into the future. I have a special guest. I have Neil joining me from Avalara. He has had almost 10 years of experience in the software and e-commerce space. He's been in the tax space with Avalara since 2014 and spends much of his time helping merchants navigate the complexities of sales tax through automation and understanding the rules, right? And in his current role, he supports the Avalara sales team, working with partners like us to be a subject matter expertise on e-commerce and specifically tax requirements, and something we're going to share with you guys today called SST, which is a newer program that's available that you guys can take advantage of. So I want to welcome you, Neil, and look forward to all the information we can share with everybody. Again, if you have any questions, throw them in the Q&A, throw them in the chat, and we will answer them at the end.
Awesome. Thanks, Jeff. And thanks for having me. I appreciate the intro. Looking forward to sharing at least some basic knowledge, high-level information about sales tax and how some merchants similar to the audience today are handling things, and at the very least what they need to be aware about. So looking forward to going through and hopefully providing some good information for everyone. Just a super quick agenda. For the first few minutes, I just want to take a quick look at how COVID has affected e-commerce in general. It's been obviously a significant occurrence all over the world, and it has introduced some unique and kind of unforeseen challenges to a lot of merchants that we're talking with. So I'm going to kind of set the stage there. Then we'll take a little look at nexus, both physical and economic. That has been an especially hot topic due to the ways that COVID has affected e-commerce in general. So we'll look at some of the challenges, some of the things that you guys need to be aware about as you're kind of managing your business, making sure that you're keeping up with all the changing laws and how they may be affecting you as you continue to grow and expand and reach new customers. From there, we'll transition a little bit into talking about the Streamlined sales tax group or program, which since 2018, when the economic nexus laws were passed, has been a really hot topic at Avalara. It's been a really great program for a lot of merchants to help get compliant in about half the country without blowing their budgets out or having to hire new employees just to manage sales tax. And at the end, I think Jeff will have some time for some questions and answers, and maybe a little bit of a discussion after that. So again, I encourage you to put the questions in the chat, and we'll circle back at the end for them. So since March or so of 2019, obviously when COVID hit, that has really changed the way that business is being done. For years prior to, we'll just say 2020, e-commerce has been growing pretty steadily. And when COVID hit, everyone kind of went on lockdown. People weren't going out as much, so not going to brick and mortar. And the e-commerce industry in general really accelerated. Everything was trending that way, and just kind of hockey sticked, if that's a word, up, and kind of skipped ahead by 5 or so years in terms of the amount of business being done online. We've seen that in the direct-to-consumer space. We've also seen that a lot in the business-to-business space. It's not just in that kind of retail selling to end user space. It's also really significantly impacted business-to-business sales as well. So transitioning over to e-commerce, it's shifted buyer behavior, and it's forced merchants then to really think about how they're going to grow and expand and keep up with changing demands in terms of the way that people want to make their purchases, and making sure that you've got the right technology and technology stack in general to keep up with that, but also obviously not to fall behind on the statutory requirements in terms of sales taxes. A really crucial question that you need to be able to answer and answer correctly to set yourselves up for success in terms of taking advantage of all these new opportunities. What the states are seeing is that they're really falling behind due to budget changes, right? Historically, sales tax has been a requirement for businesses in a particular state. With the e-commerce industry accelerating so quickly, states really haven't quite had the mechanisms in place to date to require out-of-state businesses to collect. That's kind of been changing, but COVID really caused them to try to accelerate those things. But what many states did to help businesses in these changing, difficult times of COVID is they offered a lot of, we'll just call them relief programs, to either delay deadlines for reporting and remitting the sales tax, or other similar programs to help ease that burden for those businesses that were hit really hard by COVID. That has resulted in pretty significant, historically large budget deficits at the state level, because states get a lot of their operating revenue from sales and use tax. About a quarter of any given state's budget comes directly from collecting sales tax from businesses. And this is the case basically in the entire country. 45 out of the 50 states have a state sales tax that they use to drive their revenue. You can see over on the right, sales tax is the second largest line item in terms of income for a state. So if they're relying heavily already on this type of revenue to just operate and provide all the things that they do for citizens, if they're seeing the in-state business decrease because of COVID, where nobody's going to stores, brick and mortar, like they used to, and then they're also kind of deferring some of these payment schedules for businesses, it's really all kind of snowballing on these states, and they're really having a tough time keeping up with just operating and well, not even staying in the black, but just not getting further into the red in their budget. So it's really been a challenge for the states to do that. Some of the things that states are doing, or we've seen them starting to do to make up for that, there are a number of things. It's kind of a smattering from state to state of what they're trying to do to make up for all these huge budget deficits. One is they're just increasing the tax rates, right? We can't find new businesses, we can't make them sell anymore, so we're just going to raise the rates. Let's pass it on through to the individual citizens and generate more revenues there. That's one option. The other thing that they've been doing, and it hasn't quite been as much since COVID, they kind of held back a little bit, but even pre-COVID, they're really starting to put a little bit more attention and focus on tracking and enforcing the economic nexus laws. And we'll talk a little bit more about the economic nexus laws as we go, but they're taking a little bit closer look at who's actually selling into their state from around the country to try to expand the taxpayer base in their states. Another interesting trend that we've seen is that states are applying sales tax to more and more products and services. Specifically services, we've seen states that historically maybe haven't taxed any given type of service are starting to do that. That's kind of a function of things moving generally to kind of a gig-based or a service-based economy as well too. But broadening the product taxability and assessing sales tax or requiring sales tax to be collected on more types of products and services has been another way states have tried to increase that revenue. Also, we're hearing rumblings. New Hampshire comes to mind. The nomad states, or those 5 states that don't actually have a state sales tax, would be New Hampshire, Oregon, Montana, Alaska, and Delaware. There have been some considerations in those states of actually adding a state sales tax, which would be a pretty significant shift in those individual states and the businesses operating there. So states are starting to get a little bit more creative and a little bit more aggressive with getting those sales tax dollars so that they can recoup some of that lost revenue since the beginning of 2020. So what does this all mean for you and your business as you're considering how things have changed and expanding your e-commerce footprint and reaching new customers throughout the country? Ultimately, with all things sales tax, it's always going to come back to nexus. That's where everything starts. And if you're not familiar with the term nexus, it really is just the requirement or the connection from your business to a state. Once you've established nexus as a business in a state, that state can then require you to not only register in that state, but also to start collecting and remitting sales tax on the sales in that state. If you have not triggered nexus in a state, you really have no obligation. They have no mechanism to enforce or require you to collect and remit sales tax for them. But once you trigger nexus, you're on the hook, as they say. So understanding the nexus requirements from state to state is going to be the first step of making sure that you're staying compliant and keeping up with all the rules around the country. Historically, at least since the Quill versus North Dakota ruling in 1992, nexus was loosely defined as a substantial physical presence in a state. So think employees, office spaces, inventory, warehouses, etc. If you had boots on the ground in a state, that would be a nexus triggering activity, and you would be required then to register, collect, and remit sales tax on all sales in that state going forward. In June of 2018, there was a massive shift in what is considered nexus. In June of 2018, South Dakota versus Wayfair case, the Supreme Court ruled that effectively the old standard of physical presence for being the trigger for nexus was kind of antiquated, and it didn't really capture how businesses or commerce was actually being done. So what that ruling did, to oversimplify it just a little bit, is it gave the states individually, gave the states the ability to require out-of-state sellers and merchants to register, collect, and remit sales tax on sales made into their state once they met a certain economic threshold. So that's the concept of economic nexus. You may not have any physical presence in that state whatsoever. No one that is in any way associated with your company or any inventory, product, anything from your company is in a state. Even if you meet that requirement, if you've sold a certain amount into that state, you have triggered nexus and you have that legal requirement then to register, collect, and remit going forward. Once that ruling was upheld and South Dakota kind of earned the right to require that, the dominoes fell pretty quickly. Within 6 or 9 months, the majority of states in the country that had a state sales tax also passed, or at the very least were considering an economic nexus rule of their own. And you can see today, 43 out of the 45 states that have a state sales tax have already passed and are enforcing an economic nexus rule in their state. The two that have not would be Florida and Missouri, and I know that Florida is actively debating an economic nexus rule in their state as well. We'll see what that looks like if it passes, but I have a feeling it's going to be 44 states before too long. The tricky part about economic nexus, two tricky parts. One is that effectively you as a merchant really no longer have control over where you have triggered nexus, right? Historically, it's based on physical presence. You can control where your inventory is stored. You can control where you hire a remote salesperson, et cetera. Now it's really up to your customers, right? If enough people buy enough stuff from you in any given state, that's going to trigger a sales tax obligation for you. So just tracking it and keeping up with that can be a challenge for a lot of merchants. Beyond that, just like all things sales tax, the states can kind of make up their own rules. So these economic nexus thresholds that are required before you have that tax obligation can vary from state to state, which is another tracking and kind of updating challenge that we see a lot of merchants struggling with. A couple examples on the right here with New York on one end of the spectrum, they require you to sell generally in the previous calendar year or 12 months, you have to sell at least $500,000 in sales and have that be comprised of at least 100 or more individual transactions in that state before you have any sort of economic nexus trigger. On the other hand, Pennsylvania, which is not too far down the road from New York, once you hit $100,000 in sales, you've triggered that tax obligation. So the rules can vary widely from state to state, and it's not a consistent threshold, so it gets to be a significant challenge. This is a map, obviously, of the United States. The greenish blue states here are all the states that have not only a sales tax, but an economic nexus law in place today. And a couple of the fun examples of how different the rules can be from state to state on the right. Kansas always cracks me up, where it's $1. As soon as you ship something into the state of Kansas, by the letter of their law, that merchant is required to register, collect, and remit in the state of Kansas, which is a tough one. The interesting thing, as you look at some of the notes and parentheses there, aside from just the thresholds being different states will actually look at different types of sales. There are a lot of states that will count, as an example, marketplace sales. So if you're also selling on Amazon and eBay and Walmart and Etsy and all these marketplaces, some states will count those sales against the economic nexus thresholds. Some states won't. Similarly with exempt transactions, if your customers by the nature of their business are tax exempt, I think like not-for-profits or educational institutions, hospitals, those types of businesses, some states will count sales to exempt customers or entities against that nexus threshold. Other states won't. So it gets to be just kind of a smattering and a mishmash of different rules in different places that as a merchant, it can be a real challenge to keep up with, especially if you're in high growth mode and you're seeing sales come in from all over the country every day. It's something that we get a lot of questions about in terms of how to keep up with it. I alluded a little bit to the marketplaces a second ago, and in the same vein as the economic nexus laws that each individual merchant needs to keep up with, there's another set of laws called marketplace facilitator laws. Most states, and it's kind of the same map as you see on the bottom, but most has a marketplace facilitator law, which actually requires the marketplace itself to calculate, file, and remit the sales tax on the sales made on their platform. So if you're selling on marketplaces, like we'll just use Amazon as the example, Amazon is likely calculating, filing, and remitting the sales tax on your behalf in those states. Where the challenge comes for you as a merchant is that most states also have a filing or reporting requirement on those sales for the individual merchant. So even though Amazon, as the example, is actually doing the remittance and paying the state for you, the states, when you file your sales tax return, are going to ask you to say, okay, this is how much I sold on Amazon this month or whatever it might be. So there is a reporting challenge where you have to pull data sources from different places, consolidate all of that with your other channels to show the full data set and full reporting to the individual state. The other challenge that we've seen specific to marketplace sales is if you're using a service like Fulfillment by Amazon or FBA. The challenge that represents is if you're shipping your inventory to an Amazon warehouse, it goes back to that physical presence requirement with sales tax nexus. As soon as your inventory lands in a state, the state is going to consider that physical presence in their state, which is going to trigger that requirement of you as the merchant to register and then collect and remit in that state. Where Amazon makes it even harder is that they have warehouses all over the country, and they'll shift your inventory from warehouse to warehouse, which can be difficult to keep track of. As an individual seller, I know they have their reports in Seller Central, but keeping up to date with where your inventory is actually being stored can be a tricky task. And again, every state that I'm familiar with would consider your inventory sitting in a warehouse a nexus triggering activity. So those marketplace sales, while it does open up the floodgates in terms of reach to customers, it can introduce some reporting and nexus challenges for your business as well. But there is hope. We mentioned the SST program at the top. So this is a really great program that can help you get compliant. If you're triggering particularly economic nexus in a lot of new states, the SST program covers about half the country and potentially offering some free services to businesses to get compliant without having any need to hire a new employee or outsize your CPA bill or just spend a lot more time on your own researching the rules and doing the filings and all those kinds of things. So what is the SST? So it's the Streamlined Sales and Use Tax Agreement, or SST for short. And effectively what this is it's a group of 24 states that got together in the late 90s, early 2000s and said, sales tax is too complicated. The rules from state to state are so different and so complex that it's not realistic to expect small businesses with limited resources to register in all these states and have the bandwidth or the ability to keep up with it and do it correctly. So they got together and they effectively standardized a lot of the rules around sales tax. So they simplified the registration process and the filing process and the definitions of products and tried to eliminate any barrier that a business might have for registering and getting compliant. And they did this as a way to try to generate more revenue because in their minds, businesses were just opting out of registering and being compliant because the cost of doing so was greater than any potential negative audit findings that they may come across. So it was a way to encourage businesses to be compliant. So the green states on this map are the SST member states. Tennessee is an associate member state. They do have a couple little unique nuances, such as an amnesty program. If you have some past liability and meet some requirements, you can effectively eliminate all past liability through Tennessee. But for all intents and purposes, it's the same as any other member state. What the SST did, in addition to standardizing and simplifying the rules, aside from their stated mission to substantially reduce the burden of tax compliance for businesses, they also created, in addition to that mission, the other thing that they wanted to do was take advantage of kind of the latest and greatest technology to streamline and simplify keeping up with all these things. So they created a certified service provider program. And what that program does is if a tax technology provider meets a whole bunch of different criteria in terms of accuracy and reliability and service level and goes through an annual certification process, a CSP can offer free services to qualifying SST member sellers. So it becomes kind of a rising tide floats all boats type of a program where businesses or merchants that join SST and meet a couple requirements can actually get free compliance services if they use a CSP. So the way that it works is that businesses are able to get compliant while using free services. Sounds great. The states broaden their tax base because they're getting more businesses to register, and the CSP is paying that tax to the state. So they're increasing their revenue as well. The CSP, in turn, gets a small fee for providing the service to member sellers. And also it makes it much easier for the states in terms of audits, because if they audit, or if they want to go through a sales tax audit, they actually audit the CSP rather than the business. So the CSPs get more customers and they still get a little bit of payment. States get more revenue and broaden their tax base, and businesses and merchants are able to get compliant, eliminate that risk without having to pay for those additional services. Since 2018, SST has really taken off. It was a great program before, but with the advent of economic nexus, where businesses are triggering nexus in new states at a very rapid clip because they've been selling into states, they've got this established business now, hey, they've sold $100,000 in a state, or they've met 200 transactions, they're triggering nexus in these states, they're having to get registered very quickly, sometimes 10, 15, 20, 30 states at a time with all these new laws. So if that's kind of a sudden change for a business, you probably don't have a line item in your budget to pay for additional tax compliance, whether it's a CPA or a new employee or a technology. So there's been a lot of interest in the SST because if you are triggering nexus just because of economic nexus, you will qualify in the SST for these free services. So we're getting a lot of questions, and it's been a really great option for a lot of merchants over the last 2.5 or 3 years. So if you qualify as what they call a volunteer remitter to the SST, meaning you have less than $50,000 in property in a state, or less than $50,000 in payroll in an individual state, you'll qualify as a volunteer remitter, which means you will get all of these great free services by using a certified service provider to the SST. So if you need to get registered in a state, a certified service provider will do that for free for you in any state that you need to get registered in. They're also required by the SST to provide you with free sales tax calculations, free sales tax returns filings every month. And the other big one is that certified service provider will act as an audit liaison between you and the state. So if an SST member state wants to audit your business, they actually will talk to the certified service provider rather than you. So you don't really have to deal with those state auditors, which is usually a pretty big win for most businesses. I don't think I've ever met one that enjoyed working with state auditors. So it's been a really successful program, and it's really helped a lot of merchants, again, eliminate that risk exposure in their business without having to spend an arm and a leg to get compliant. So that is kind of a quick summary of how the landscape has changed since early 2020 in terms of e-commerce being a significant driving force between businesses being able to grow and reach new customers that maybe hadn't been buying online before, as well as how Wayfair has impacted or driven impact on that e-commerce shift, and then what the SST has been able to do to help merchants get compliant and continue focusing on growth as opposed to focusing on compliance. So Jeff, that's everything that I had. I know we have a little bit of time left. I don't know if many questions have come in through chat yet or not, but I'll throw it back to you for any questions or comments.
Yeah, so I think we have a link. I know Caroline can post it in the chat. Is there one more slide with the link, or did we not put it on the slide? Better together. Yeah, we are. All right. Well, so we'll put the link in the chat where Avalara will kind of jump on a call with you. They'll kind of walk you through what all, what's going on in your particular situation. They'll answer any questions about SST. I always get all these acronyms.
Yeah, they're tough to keep sorted out.
Yeah, and every company has different ones. And what's cool about tax?
Yeah, the one thing that's cool about tax
SST is that it is a good first step for people that are trying to understand this and figure it out. And as an e-commerce seller, I came from and maybe this is a good kind of segue question. I came from kind of the Amazon world, right? My business was always online, always on Amazon, always on the marketplace. All I had to do was tell Amazon my nexus. I didn't have to really worry much about it. But then I opened up my own website. And so I knew that I had Nexus in New York because that's where my product shipped from. I knew that I had Nexus in Illinois because that's where I live, but I didn't understand what else my tax obligations were. And what's interesting and kind of tricky is that, you know, every state does have these different rules, and some I just need to apply and tell them that I don't make enough to meet their thresholds. Others I don't have to do anything. And so it can be very burdensome. It can be a heavy burden on a small business, and that's really what SST was created for. And if you're beyond that and you're at kind of the next level, Avalara has a ton of information on their site to start helping you kind of navigate your way through this. And they have, I think, you know, one of the reasons we've partnered with them is because there's multiple layers that begin to occur with tax. And as your business gets a little bit bigger, as your complexity gets a little bit bigger, as you start to go international, all these tax rules change. And, you know, what I love about the program that Avalara has built is that they really can kind of work with you getting started all the way up to scaling up. And if at the beginning, all you want to use them for is creating reports and you want to do stuff on your own, you can. And if you get to the size where you want them to handle all the remitting for you, they can. So, you know, in my mind, as a business owner, I look at a service like this, like I do bookkeeping. I am not in the business of being a bookkeeper. And so I hire an accountant and a bookkeeper to take care of that part of my business and to give me the details that I need to help manage my business. So I'm going to move on to a couple of questions that we have. Doug has asked a couple of questions related. Oh my Lord, related to the UK and the passing of a law about requiring foreign importers to collect and remit UK taxes at the point of sale. I think that we have a link that is related to a specific article that Avalara has posted about it. Thank you, Doug. We will share that with everybody else. But is there something you can kind of add to kind of what's happening with the new law in the UK and how that's impacting sellers and e-commerce brands?
Yeah, that's been another big shift with Brexit happening officially on January 1st. I think it was January 1st. All of their import and VAT requirements have kind of changed. We do have an office in England, so we do have a team of specialists that work specifically with VAT. We also have a few folks here stateside that are pretty focused on helping domestic to the US or North American sellers understand those requirements. But generally speaking, in the UK, yes, when you are importing goods from the US to the UK, you do need like a VAT ID number or registration number to be able to import those goods. Beyond that, there are a lot of different requirements around customs duties and fees that need to be considered as well, just to get your products to those customers. The biggest shift that I'm aware of, and I'm certainly not a VAT expert, but the biggest shift that I've kind of come to be aware of recently is that there used to be a small seller exemption on those registration requirements to the EU and the UK, where if the shipment was less than like 135 pound or euro, there were no customs and duties or VAT required at the time of purchase. That's gone away, where there really is no exception, where one way or the other, everything you sell into the EU and the UK is going to have some sort of VAT requirement on it. Again, I don't know all of the details. That link, I see that Doug, I think it was Doug, shared it, or whoever happened to post that with the avalara.com/VAT live has a lot of great resources. I'd also encourage you to reach out to our team as well if you do want to have a little bit more detailed conversation about what your requirements might be, because we do have a lot of VAT specialists on our team.
And again, we posted in the chat, Caroline will repost that we have a link that you can use to request the information. They'll know you came from this webinar, and they'll do kind of an initial analysis, no commitment review to talk to you about your account and point you in the right direction. I wanted to ask you a question because tax isn't fun, but I want you to give me some fun facts about tax. So we talked about this during the preparation. So I don't know if you know these all off the top of your head, but we were talking about some like crazy taxes that like one thing's taxed and another thing's not. So I thought maybe that'd be kind of a fun thing to share with everybody and let them all kind of spin their heads on some of these ideas.
I love it. So my personal favorite, or one of my personal favorites, is in New York. And I think this is one that we were talking about earlier, Jeff. In New York, bagels. Everyone loves a good New York bagel, right? If you just buy that bagel outright and take it home and eat it, it is not subject to sales tax. But if you're in that deli or that bagel shop, wherever, and they slice it for you, that bagel instantly becomes taxable. Because the second that someone cuts that bagel for you, it then becomes a prepared food as opposed to a grocery item, which will make that subject to sales tax in the state of New York.
Yeah, the one that I thought was funny was that tacos are not taxable. I don't remember what state it was in, but burritos are taxable.
Yeah,
So,
I don't remember the state on that one either, but
yeah,
that's a good one.
and then I think somebody else on the team said something to the effect of, okay, so Doug's back and he says automotive labor is not taxed, but bicycle repair is taxed. Though under the law, they are both considered vehicles.
That's a good one.
So this is kind of like we're gonna do a series of these because Avalara is gonna give us these, and we're gonna do a series of these to just kind of give you stupid random facts about tax that you can bring up at your next party and look really cool in front of your friends.
Yeah, you'll be a hit at parties talking about
right.
Sales tax for sure.
Okay, so Sam was asking back to the real question. Sam was asking about economic nexus. Is it based on is it based on an annual basis or based on your business, or how is it, or is that different among states? Is it always January to December?
Yeah, just like everything else sales tax, the answer is it depends. So the rules will vary from state to state. I think invariably it's some sort of a 12-month period in the past.
Okay.
There are some states that specifically say it's the previous calendar year. Some states say it's the previous 4 quarters. So it can kind of cross that December to January timeline if it falls that way. Generally, it's in the previous 12 months to some degree.
Yeah, so this is probably something, I guess my recommendation would be, this is probably something you want to be reviewing quarterly, just to ensure that nothing has changed. You don't need to check an extra box on your e-commerce site in terms of where you're collecting tax or change anything related to that. You want to just kind of be checking in on this on your business. If you have a really big month, maybe you want to do it after that big month. But for the most part, you want to be checking in on this quarterly as your business is growing and as you're building this out. And remember this, and Neil covered this earlier. States are hurting right now. I saw a great one that the state of Washington is creating a billionaire tax. 97% of the revenue from that tax is going to come from 4 people. We know who the 4 people are, right? It's Jeff Bezos, his ex-wife, Mackenzie Scott, Bill Gates, and Steve Ballmer. They account for 97% of the revenue. Somebody asked the question, what if they move out of state? Right? So the states are trying to close these gaps. More and more has moved online, and they're trying to tax online revenue. One of the best things that we can have as a community is to continue to advocate for things like SST. That just makes it easier on us as business owners to have unified tax laws and simplistic systems that don't overcomplicate our business and our ability to grow. Because you're not trying to do anything to, most of us are not trying to do anything to circumvent tax. And a lot of people kind of get caught up in this. A question that was asked, does Nexus revert back to, is Nexus a point forward, or is Nexus a automatically everything from behind you is caught up? How do you kind of protect yourself from like a Nexus liability type of issue?
Yeah, and before I answer that, I'll touch on generally how or what I suggest to merchants and businesses that are concerned about economic nexus in terms of, is it the previous calendar year, previous 12 months? What I generally suggest, and again, I'm not a tax advisor, so I'm not giving tax advice, but generally what I suggest to businesses concerned about this is look at your previous 12 months. If you're at or very close to $100,000 in sales or 200 individual transactions in an individual state, at that point, you probably want to start digging into what the actual laws are. So before you
All right,
spend
so
all the
take a
time
second
going,
and repeat those numbers one more time so everybody.
So again, all of the economic nexus thresholds can be different from state to state, but on the low end of that in any given state, it's $100,000 in sales or 200 individual transactions in that state.
That's annual?
Yes.
Yeah.
Yep. So what I suggest is, if you're thinking about this and thinking about digging into this, run a report, look at all of your sales in any given state for the previous 12 months. And at this point, you could probably just do 2020.
And I'll even simplify it for you a little bit more. If you're talking, let's say you're from you're international and you're looking at, and I'll actually ask that question in a minute in terms of what international liability is for coming here and what US liability is for going international. But we follow a general, so I saw, I don't want to get political, but I saw this with the political map, right? And they broke it down, the political map, into a population map. So don't think about our country as a landmass. Think about the United States as a population mass. So your states that you're going to have your nexus in first are going to be a California, a Texas, a New York, maybe a Florida, right? Those, maybe a Pennsylvania, right? The larger populous states in the United States. So when you're talking about individual sales in a state at 100,000, there's a general math that would say you need to be at a certain size before you'll even hit that in California, unless you're unless you have a really strong East Coast or West Coast or surfer business that would drive a disproportion of your sales there. Because when you start to pin your sales for any sales organization, the map looks the same for everybody. The sales are occurring where the population states are, because that's where people are buying and shipping. That's why there's distribution facilities in Utah and in Kentucky. Like, they've all figured it out as to how to get things to people quicker. So keep that in mind. But I think that's a great kind of threshold number to be keeping an eye on things. So I'd like to have you touch quickly on what are the rules if I'm an international seller. Do I gain at Nexus in the US and need to be concerned about that? And if I'm a US seller selling international, how do I kind of determine international tax obligations?
Sure. I'm going to go back to that question about does it revert to the original sales in a state once you've triggered Nexus? The short answer to that is no. So once you meet that threshold, every sale after that point is subject to sales tax. That's actually something specifically the Supreme Court called out in the Wayfair ruling, is that it's on a going forward basis. So if the threshold is 100,000, sales 0 to 900, 99,999 are not subject to sales tax, but $100,000 and on is, because at that point you've triggered Nexus. So don't worry about going back to anything before you've triggered Nexus, but once you have everything going forward is subject to tax. With the international businesses selling into the US, they are subject to all of the same rules. We don't have a federal sales tax or a VAT program or methodology like most of the rest of the world. So it is there. International sellers selling into the US are subject to those same nexus requirements and economic nexus thresholds as any other seller is. Right? That's how the states get revenue. That's how we tax business. What I will say though, and we get this question a lot, international sellers into the US can still join SSD. So that it's not a disqualifier just because you're from Canada or the EU or wherever. You can still join SST just like any other domestic business can.